Good afternoon, ladies and gentlemen. Today we are on the 8th day of the second season of Navaratna All Kerala Virtual CPE Conference of SIRC of ICAI. Let's commence the session with the thoughts of the immortal, the one who is awake in those that sleep. Ya Esha Sapteshu Jagrati. Let's rise for the institute motto.
Ya esha supteshu jagrati. Ya esha supteshu jagrati. Kamam 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 pursho nirvimanaha tadeva shukram tada brahma tadeva muchyate tasmin lokaha shataha sarve taduna kashchan etadvaita
Gentlemen, Navaratnas not only mean 9 gems, it also means the 9 extraordinary people in the court of King Vikramaditya, including Dhanvantari, Kalidasa, and Vararuchi. Let me request a shining gem among the 9 leaders, the Navaratnas of the 9 branches of SIRC of ICAI in Kerala, the chairman of Kottayam branch, CA Prashant Srinivas, to welcome all our participants and the faculty. Over to you, Prashant sir.
Thank you, Prem sir. Good evening, ladies and gentlemen. On behalf of the 9 Kerala branches, it's my proud privilege to welcome all the participants to the 8th day of the second edition of Navaratna Conference. As the prelude was given, Navaratna is the concilium of 9 Kerala branches. We have come together, and this idea was conceptualized. It is a brainchild of then Palakkad branch chairman, CA Bimal Venu, and rightly the legacy is being carried on by the present chairman, CA Vinoj Menon. And accordingly, Navaratna Conference has become a dream come true. Like Navaratri, Navaratna is also providing us with 9 days of luminous and joyous and rich knowledge experience. Today is also no exception. On the 8th day, we are discussing certain very relevant, very pertinent auditing standards on audit planning, documentation, and reporting. Planning is all about well begun. As the saying goes, well begun is half done. So planning phase is about that. Documentation is something which protects the auditor if something untoward happens. And reporting, for reporting also, the working papers form the basis. So these 3 are so interconnected. So it's very relevant. It's not only from the practice perspective, because QRB, peer review, everything is in the offing. Documentation, the importance of documentation cannot be undermined. So when the thought of the topic came in the discussion of the Navaratna chairman, we had no hesitation in choosing Mohan R.Lavi sir as the speaker. He is a most revered teacher, is an erudite speaker. Sir, I welcome you to the 8th day of the second edition of the Navaratna Conference. Our Central Council member, CA Babu Abraham Kallivailil, and our Regional Council member, CA Jayakumar K. George, they have played a very pivotal part in making the Navaratna Season 2 a reality. I welcome Jayakumar sir and Babu sir to this conference.
Thank you, Prashant.
Thank you, sir. For the past 1 month or so, the 9 chairmen had been interacting in the virtual mode relentlessly without any inhibition or ego. And I would confess, this interaction, this camaraderie, this brotherhood has made this conference a reality. I welcome my brothers from south to north, CA Ramesh Kumar from Thiruvananthapuram, CA Praveen from Kollam, CA Rajanish from Alapi, CA Ranjit from Ernakulam, CA Aryan from Trichur, CA Vinoj from Palakkad, CA Arun from Kozhikode, and CA Reggie from Kannur. We welcome all the managing committee members of the 9 branches, senior members, and my dear fellow members to this edition of the learning experience. I'm sure for the next 2 years and 2 hours, we'll be spellbound with amazing pieces of knowledge. And I wish you a very wonderful learning experience. Happy Onam to all. Signing off. Thank you.
Thank you, Prashant sir. Like last year, this year also, the conference is spearheaded by 2 shining stars. CA Babu Abraham Kaliwal, our dearest Center Council member, and our past SARC chairman, CA Jobon K. Josa. Let me request our beloved Jomon sir to enlighten us with your inspiring words. Over to you, Jomon sir.
Thank you, Prem. Good evening to all of you, the 9 gems, and particularly today's host branch chairman, my very dear friend, more than that younger brother. He calls me Achachan, Prashant Srinivas, other 8 branch chairmen, MC members of the 8 branches. Prem Sabha, since are particularly seamlessly coordinating as a smiling MC throughout. And very, very learned speaker, more than that, a very dear friend with whom I interact regular basis for the reason that I can't but respond in the sense that when he read his articles in the Business Line, the latest being about the very unrealistic frenzied IPO of Zomato, in which he had very candidly written in the Business Line. And he once reminded me that my position, my column has changed from left extreme to right extreme. And after that, I've been very more carefully watching all that. Mohan R.Lavi sir has been very, very supportive ever since we identified him. We were late in identifying such a talent hiding in Bangalore. I would say that a bright star on the horizon. And finally, Prashant would recall that he came for during my chairmanship for the seminar, regional residential program in Muna, just for a 3-hour session, how much he had to travel, and picked him up from the airport. Ever since then, for the programs with Kerala branches and SARC across during my chairmanship has been very supportive. It's a reservoir of knowledge, handles a variety of topics from IFRS to valuation to GST to today is enlightening us on standards and auditing. Prashant has set the tone for the whole program. Standards and auditing have, as all the chairmen and the managing committee members would agree, is one of the mandatory topics, prescribed by the council. 2, 1 is standards and auditing. 2 is a code of ethics, the new code of ethics, which is there from 1st July 2020. It is not without reason. The level of compliance is dismally, disturbingly poor. And also that ever since Companies Act 2013 came, this is part of the statute book. Till 2013, it was only a dictum of the institute on its membership saying that while discharging your attestation function, you should comply with the various standards and auditing which are issued by the institute from time to time. But 2013, the whole situation changed. The Chapter 10, Audit and Auditors, Section 143 is a very, very important section for all of us practicing accountants. Powers and duties of auditors and auditing standards. The caption itself contains the term auditing standards. And I've said this, but even at the cost of repetition, I would reiterate and re-emphasize that 143.9 is a very challenging subsection rather. It is every auditor, it states every auditor shall comply with auditing standards. And we have so many standards today, and instead of bulldozing through all the standards, while discussing on the topic finalization of the 9 chairmen, we called up sir, and then we just discussed this, and we agreed to the suggestion that planning, documentation, risk assessment are very, very important standards. SA 300 planning, documentation SA 230, and risk assessment, of course, identifying the risk in the background of understanding the entity and its environment, SA 315, and so on. So there are many other important standards, 500 on evidence, 501 additional considerations. old series of 700, 701, 705, 706 reporting standards. So very, very important topic. Cannot be, because normally when talk about standards and auditing, I will just share one more example in 1 minute and round up. A friend of mine who practices in a small town in central Travancore. He was part of a, he had done the audit of 2 private limited companies, which is part of a larger NBFC, which ran into some kind of a trouble. And the letter from the SFIO, Mohan sir, SFIO sent him a letter. He had done the audit of 2 small private limited companies in the group, in which there was only an FD of about 5 lakhs, for which he had all the proof. The first line of SFIO was, "Dear CA so and so, please provide the following. 1, evidence that you have done the audit of these 2 companies for the last 3 years in total compliance with auditing standards issued by the ICAI." So when I used to talk about across Kerala region, in smaller towns, when I talk about standards and auditing, there was a feeling that this is for metros, this is for the audit of Reliance, Infosys, TCS, not for us. But that's why I'm giving this example. So all of us are today substantially more exposed to, rather the stringent supervision is there. NFRA has taken firm footing. Regulatory authorities end up under 132. So we need to be extremely careful, judicious, and complying with the standards, more compliant in discharging our attestation duties. And I'm sure that Mohanji's way of dealing with the topic would bring in a fresh perspective, no doubt about it. So looking forward, quite like every one of you, for a blast of a session that is normally comes out of Mohanji. So back to you, and once again, big thank you, Mohan sir, for patronizing Kerala once again with your knowledge and virtual presence. Though post-COVID, we'll have physical meetings, reignited, I would say. And my sincere compliments to the 9 gems, my brothers in the profession, from Trivandrum to Kannur, all of you. Have a great learning time. Thank you so much.
Prem sir,
You are on mute, sir.
Thank you, Joman sir, for that words. In addition to Mohan sir and Joman sir, we do have one more expert in standards in the panel, CA Harikrishnan sir, our past chairman of Kottayam branch. Let me request Harikrishnan sir to introduce our faculty of the day, CA Mohan R.Lavi sir. Harikrishnan sir.
Am I audible?
Yes, sir.
Respected Babu sir, Senate Council member, Jovan K. George sir, Regional Council member, and chairman of the 9 Navaratna branches of Kerala. Today's faculty, CA Mohan R.Lavi sir, managing committee members, senior members, and dear friends, dear professional colleagues. I'm happy in getting an opportunity to introduce a person of the stature of CA Mohan R.Lavi sir in this August meeting. CA Mohan R.Lavi sir qualified as a chartered accountant in 1989. He has over 25 years of experience in industry across a variety of industries. He has worked in senior positions in finance, in manufacturing and software companies. Mohan sir has also over 6 years of experience in practice. At present, he is a partner with Mrs. K.P. Rao and Company, Chartered Accountants, Bengaluru, and heads the Ind AS and GST practices of the firm. Mohan sir is the author of books on IFRS, Ind AS, CA.M., Key Audit Matters, and other related topics. Mohan sir has spoken at various conferences in India and abroad on accounting standards, IFRS, SOX, that is Sarbanes-Oxley Act, GST, and etc., and is a faculty member with the institute for their IFRS certificate course and registered valuer programs. I am not speaking at length and standing in between myself and the respected faculty. So with these words, I'm happy to introduce our today's speaker. Thank you. Over to you.
Thank you, sir. Thank you so much.
Thank you, Harishan sir. Now we are all waiting for your words, Mohan sir. Over to you.
Thank you, sir. Thank you so much. So yeah, good evening to everybody who have been a part of this conference. First of all, I start off by normally saying whatever little I know in Malayalam. Ellarkkum namaskar. That's all I know. I don't know anything more than that. So don't ask me any questions beyond that. So first of all, let me thank everybody in Kerala who have introduced me to this or asked me to speak on this particular topic. So I've got a very good policy which I've developed over the few years, right? One is that if anybody from Kerala asks me for a session, never refuse it, okay? That's the first policy I've developed. And the second policy is that if Jomon George sir asks me for a session, definitely I should not refuse it. Even if I've got other commitments, I should not, definitely refuse it. So when he called up for this, I did not have any choice because of these two policies. And so I'm here today to talk to all of you all on this topic of auditing standards. So thank you all of you once again for giving me this opportunity to speak on this topic. I have seen the conference, the 9 days programs. And let me be honest in probably telling you all that probably auditing standards is one of the most boring topics in those 9 topics, right? I'm being very honest about this, but when I'm saying boring, I don't mean in terms of the fact that auditing standards are not, important enough. I'm not, please don't get me wrong there, but if you compare to input tax credit, and if you compare with, marketing in your profession, and if you compare with other topics which all of you have been discussing, auditing standards is probably not going to be top of a list in terms of what you're going to look at in terms of following. But as Prashant has said and as Joman sir has said, this is a topic, even though it may be dry in nature, this is a topic which we cannot avoid. We cannot avoid discussing this topic or thinking about this topic or trying to implement this particular topic, because it is becoming increasingly difficult to sort of get away by not following the auditing standards. I'm not saying that we are not following it, but I think it requires a certain degree of additional what you can say, a little bit of diligence on our part to sort of complete what we are already doing in terms of auditing and auditing standards. So I think that is what I want to put as a placeholder before I commence the session here and talking about these auditing standards. Of course, we've been speaking about only these 3 standards. There are a whole variety of standards which the ICAI has brought out and which are there for all of us to follow when it is applicable. If it is not applicable, obviously we do not follow. We need not follow it. But when we talk about this planning, documentation, reporting, and you look at this topic of auditing standards, and as Joman sir correctly mentioned, there is one blanket sentence in the Companies Act which says that every auditor shall follow the auditing standards. That's it. He does not say prescribed by ICAI, prescribed by anybody. He does not. It's just a blanket sentence. So we are going to assume that these standards, and of course, NAFRA has come into play now. The example which Joman sir mentioned, talking about that NBFC getting this SIFI report, we are seeing this happening increasingly. We are seeing this happening increasingly, not only for NBFCs, but even for cooperative banks. In a few cases, people have got notices. These questions are being asked. So I think that the way we should probably look at this auditing standards is that, over the last at least about 5 or 6 years, in my experience, over the last 5 or 6 years, the way in which the outside world is looking at auditors has changed. They are expecting more from the auditors. I'm not saying they are, sort of blaming the auditors, but all of a sudden, the role of the auditors or the way in which the outside world, let it be a regulator, let it be an investor, let it be anybody else, the way in which they are looking at auditors has changed. It is our responsibility as auditors to change the way we are looking at what we are discharging our function in order to meet that expectation of the outside world. And when we are talking about meeting those expectations, we are talking about the auditing standards here. We will restrict this discussion only to a few important standards, but without trying to remove the importance of the remaining standards, we will focus more on these particular standards. This is what we've been mentioning here. We don't see NAFRA coming in and trying to give us additional auditing standards, because I can tell you all with a great degree of certainty and confidence and assurance that however large the company it is or however small a company it is, the present set of quality and control standards and auditing standards issued by the ICAI are more than sufficient to take care of even a large audit as well as a small audit. They are comprehensive in scope. They are very detailed. They give exact guidance what needs to be done. So we don't see that, even though there is a provision that 143.10 says that the NAFRA can come out with auditing standards till then ICAI standards will be used. We don't see NAFRA really coming into that role, because if you look at the set of auditing standards which has been given by the ICAI, you will find that there are a total of 46 standards covering a whole bunch of areas, right from quality control up to other assurance engagements, audit evidence using the work of others, audit conclusions and reporting, special areas of audit, what are the risk assessments and response to the assessed risks. It has got a complete repertoire of auditing standards. If you all take the trouble of reading all these auditing standards, right now, it's this like when we were doing our CA, we had a book called as Kamal Gupta on Auditing. The book was called Kamal Gupta on Auditing because it was supposed to be a reference book for auditing. If you all go at that time, of course, we did not have too many auditing standards and all. So, but if you go through these auditing standards, you will ensure that you're actually reading a book on auditing. You're actually reading a book on auditing. It is that comprehensive and it is that detailed here. So, one of the things we should definitely understand is that once we have this repertoire of auditing standards, it is obvious that all the 46 would not be applicable for all the audits which all the auditors are doing. We will have to choose which are the standards which are definitely going to apply to us. And even before we get into planning and all those things, I would like to spend a few seconds or a few minutes on quality control, because that standard is like a standard on top of all the auditing standards. There's only one thing called as SQC1 on quality control. It has got a lot of provisions. A similar standard 220 also talks about quality control in an audit. Both are almost the same. A lot of words have been repeated in that particular, both those standards. A lot of paragraphs have been repeated in the standard, but the overlying principle or the overarching principle of quality control, SQC1, is that we should maintain quality in the audit we are doing. Now, as Joman sir rightly said, there was a feeling, there is a sort of a expectation or a thought process that if I'm staying in a small town, I don't have to worry about auditing standards because of the fact that who's going to catch me. I know the client very well. The client knows me very, very well, right? And okay, suppose something does happen, we can always go back and speak to the client and get something done. I think that thought process has to change now. That thought process has to change now, because you may know the client very well, the client may know you very, very well. All that is absolutely given, but still there is a requirement that you all will have to follow certain minimal procedures. So the first point I want to drive to all of you across is the fact that don't worry, small town, big town, where you are standing, what is your client's turnover, what is your office turnover. Don't worry about all those things. I'm only going to put one placeholder for all of you and say that to the extent possible, please follow all the auditing standards. All you'll really need to do is that list out which are the auditing standards which are required for that particular audit and ensure that you are following. Have a small checklist, whether apart from SQC1, of course, all the rest which are applicable there. Have a small checklist and put it into your file. You all will observe that once this job is done, and I can tell all of you that this is a one-time exercise. Once you do it for one client, it becomes a natural habit to do it for the remaining clients also. The first time you will have trouble. The first time there will be difficulties. The first time the papers will not be in order. You will find all sorts of working papers in the audit file, apart from what you require. Those will have to be arranged. It has happened to the best of firms, it has happened to the worst of firms also. So don't worry about that particular process. This principle is very, very important for us to understand, because whether we like it or not, we are moving towards a situation wherein we have to defend the audits we have done. I'm using this word with a little bit of caution. When I'm saying defend the audit we have done, I'm not meaning to say that something wrong has happened. But I'm just saying that if anybody, whosoever it may be, questions what has happened here, we may have to defend saying that we have done this particular procedure for this particular area and this is what has been the result. These set of auditing standards issued by the ICAI are in tune, are matching with the global standards, are matching with the global standards. So even if you have got a counterpart who's a part of an international auditing association, you all will find that they are talking the same language. They are still talking the same language. The key audit matters, for example, which came in, they are still called as key audit matters in Europe. They're called as critical audit matters in US. So the entire auditing community seems to be moving towards a certain set of principles on which audits will definitely have to be done. Now, when I said quality control, we are not talking about ISA 9000 and all those things. Please don't think that you should have 25 people and no. For example, the quality control standard talks about something called as human resources. In a small audit firm, 2 partners, 3 article clerks, 2 article clerks are on leave. What human resources can we possibly have, right? So that is fine. I'm not saying that you should follow that particular part of human resources. To the extent possible, you can develop as a human resource yourself. That's all the standard is asking us to do. So I would just put that in front of all of you all and tell you all that please look at this particular aspect, that to the extent possible, as a starting point, whichever audit you are doing, and please remember that it is, we are not necessarily talking only about a statutory audit. We are also talking about a tax audit. We're talking about a general audit assurance function which has been given there. Just list out the auditing standards, tick applicable yes or no. If it is yes, you see what you have done there. You will find that, very surprisingly, you will find that there is tremendous scope for improvement in your documentation. I'm going to come to documentation in a bit, but I thought I will just put this across to you all. Just look at the variety here. We are talking about, the general responsibilities of auditors. We are talking about risk assessment and response to assessed risks. These set of auditing standards have spoken so well about the risks. As Joman sir also was saying, if you read this along with the code of ethics, you all will find that one of the threats we have got is this threat of familiarity. The threat of familiarity. The threat of familiarity means that I know the client very, very well. The client knows me very, very well. Nothing can happen between both of us. Suppose something does happen also, we know each other so well that we will ensure that the situation is handled. This is the thought process which was there till today. I don't think we should have that thought process any longer, because of the fact that he will still be your client, he'll still be your good friend. You will still get whatever documentation you want from him later on, but a certain minimum documentation, say for engagement letter, MRL, appointment letter, fixing the fees in advance, ensuring that your independence is not compromised. All these things are basic minimums we have to follow, irrespective of howsoever well the client is known to you. We are not in a situation today, unfortunately, wherein, because of the way in which, as I said, the way in which the people are looking at the auditing profession, as I said, it's not in a negative way. They're expecting more from us. They're expecting us to deliver more. That's all. They're expecting us to deliver more. And as you all will see, probably when I do SA 700, there is enough and more scope in the audit report to express our opinion. The audit report need not change any longer. There is enough and more scope. If you have key audit matters, you've got other matters. If we want to express our opinion, we can definitely do it. You've got CARO also now coming up. You've got a revised CARO. Of course, a few of the clauses can be controversial there, but still, there is enough and more space. If you want to report it, you can definitely report it. Look at the variety. Risk assessment. We all know this for a fact. Every audit has got a certain element of risk. I don't think we should even, debate that particular statement, because it is a fact that every audit has got a certain element of risk. Risk cannot be eliminated. It can only be minimized. Risk can never be eliminated. It can only be minimized. I will give you all a small example about what happened in a recent case so that you'll understand why this risk is very, very important. Listed company. Auditor is in Bangalore, listed company. There was a certain transaction which took place, which was a payment made to some political party or whatever it may be. I will not get into the details of that. But the payment was routed through a subcontractor. And the subcontractor was rated by the GST department. And the subcontractor said that, look, I have not done any work. This is only a transaction for some particular purpose. So the GST department came to know, told the client to reverse the input tax credit. GST department informed the income tax department. It became a completely problematical situation. Statutory auditor has to sign the 31st of March 2021 financial statements. And this was, of course, the company and all their, to all credit to them, they did mention bits and pieces of the transaction. They did not say exactly what was happening. They mentioned bits and pieces of the transaction. But being a listed company, they were very clear that they told the auditor that, look, this transaction is being settled. And when I mean settled, they're saying that we're going to pay up the tax. We've already reversed the ITC on the GST. We're going to pay a certain amount of income tax. So we will give you all the necessary information, we'll give you all the necessary documentation. Please ensure that this transaction is not reported anywhere in your audit report. Kindly just ensure that, because it can have multiple repercussions on shareholders, share price, and all those things. I think at this point in time is where we should remember independence, we should remember ethics, we should remember all those things at this point in time. So I happen to know the auditor very, very well. So he was in a fix. He did not know what to do because, of course, the client is paying a very good fees. It's a listed company. He completely understands the client's perspective also. But he asked me, what should I do? Should I qualify it? Should I not qualify it? What should I do? Is it a key audit matter? What should I do? Should I mention this somewhere? So because of the urgency of finalizing the March results, he had not asked a few questions. So I told him that you please get further details of the transaction. When this took place first, why was the GST reversed? You just get a few details of the particular transaction. When he got the details, he found that this is not a 2021 transaction. This is happening from 2018-19. He has not been informed about it. At that point in time, I told him, please don't even discuss any further about this. Please put it as a qualification in your audit report. Maybe you put it as other matter. You don't have to say, this thing, because the client is obviously not informed about this. If this was happening from 18-19, you should have told in 18-19. Why is he telling us only 21? So I told him there's no further discussion. Despite whatever information he may give you, you will please have to mention this in the audit report, other matter, so that it doesn't matter what are the repercussions. I think this is where auditing standards will help us. Along with the code of ethics, independence, the risk is there. He may lose the audit. They may choose another auditor. All those risks are there. But as I have always maintained, there is a certain threshold which you cannot cross as an auditor, which you should not cross as an auditor. And I told him very clearly, suppose they do ask you, please inform them that had you been honest with me from 2019, now don't ask me why it was not informed to me, but obviously you have not told me transactions, so I'm going to put it as other matter. So he put it as another matter there. Luckily, there was not much of a fallback from the shareholders. They did not, and the price also of the company did not change significantly. But I'm just telling you all that, look at the pressure with which we have to operate and the fact that we have to follow all the auditing standards in the same breath, in the same perspective. Listed company, the added problem of a limited time frame also is there. But thankfully, nothing has happened there. They also understood what has happened. Subsequently, the transaction was settled. They made a particular payment. And I think the June quarter, they're given some disclosure about the entire transaction. So all that has been completed. But this is just an example about the risk in an audit. He did not know about this from 2019. When I asked him, he said, I'm getting a proper invoice. We are looking at a proper invoice. We're looking at proper documentation. How would I even know that this is not a payment made for job work to be done? This is not a part of my job. I don't know, please check with the internal auditors. The internal auditor also said, no, we do not know. We are only looking at the same document as the statutory auditor is looking at. So every audit will have an element of risk. It is up to us to minimize those risks. It cannot be eliminated. We will come to documentation a little bit later on. Audit evidence, we all do that every single day. Day in, day out, we collect a lot of audit evidence. Here, it's a little bit more detailed, a little bit more structured. We are talking about what is, we do sampling, we do analytical procedures, all these things we are doing. But again, a set of very detailed auditing standards are there for that. Using the work of others, also very important. Sometimes we use the work of joint auditors, sometimes we use the work of branch auditors. All these also become a very important part of auditing standards. And as I've also mentioned, if you look at the audit report today, you will find that there are enough and more paragraphs wherein if you want to say something, you will definitely say something. You have an opportunity of saying something, saying what you want to say, convey what you want to say. There was a certain amount of criticism that the audit report is too detailed. It has got too many disclaimers. But if you look at the audit report in perspective, and you look at audit reports which are given abroad, audit reports given abroad don't have Caro, that's all. Apart from Caro, the structure of the audit report is almost the same. They don't have a concept called Caro, but apart from that, the structure content is almost the same as we have in the Indian situation. Sometimes auditors put thresholds for materiality, which has been specifically mentioned there, but otherwise it's the same thing. So if you want to say something now, we can definitely say it. Using the auditing standards, we can definitely say that this is what we'll have to report as per the list of standards in audit. So this completes the set here. And on the basis of opinion paragraph as per SA 700, this is what we give, right? Our responsibilities are further described in the auditor's responsibility, the audit of consolidated financial statements. And again, this word is very, very important. We are still saying that it is only reasonable assurance, but there is not a guarantee that an audit will conduct material misstatement if it exists. This goes back to the old discussion which we have got. Is he a bloodhound, watchdog? What is he? Nowadays, I think we should remove the discussion, auditor, bloodhound, watchdog. The discussion is over. That happened sometime in Kingston Cotton Mill States, a very long time back. I will just put this as, to use a cricketing terminology, auditor is now like an umpire, a third umpire, let us say that. He has just got to ensure that whatever decision he gives is the correct decision. That's all we'll have to look at. Because it is not a question of time frame. It is not a question of not following auditing standards. All we have to look at is that by looking at the financial statements, there is reasonable assurance that it is free from material misstatement. You all can look at a lot of, for a moment, let us forget about ILFS. Let us forget about, DFHL, all let us, right from Satyam to ILFS, let us forget all those transactions which have happened in India. Not many have happened subsequently. But abroad, things are still happening. We still have these issues of accounting accidents, as I call them, happening very day in and day out. A lot of companies have again fallen back and looked upon the auditors saying that, were you not able to detect a fraud in this particular financial statements? There was a Chinese company which was basically trying to become the Starbucks of China. It was a coffee chain, boosting up the sales. They had proper receipts. The auditor had to look at the proper receipts. He did not know what is to be done. He just looked at the proper receipts, but there was no, equivalent money coming in there. But the auditing standards are meant to provide only a reasonable assurance that it's a high level of assurance. We also say it's a very high level of assurance, but it's not a guarantee. So when we spoke about the word called as umpire, we are saying that he is not going to, the question of detecting a fraud the discussion does not arise at all. I am saying we should not even get into the discussion because we are not, so that's not a part of our KRA, or that's not a part of our responsibility at all. Having said that, however, I will put in a small disclaimer to this also, saying that in case the audit throws up something which is slightly, I will use the word doubtful, skeptical, the auditor has got all the responsibilities to go and further look at that particular transaction. In case he feels a particular report has to come on the audit report, or he feels that something has to be mentioned in the audit report, he may have to do it, because there is a possibility that there can be a material misstatement in that particular area which he has chosen for an audit, or that particular transaction is chosen for an audit here. So reasonable assurance is definitely there, but when you smell something which is probably problematical, please ensure that all the necessary questions are asked and you build up your documentation to ensure that you have got those necessary questions. Prashant was talking about 300 and he said that it's compliance. It's a very important part of planning an audit, and early planning or properly planned is 50% of the job well done. Absolutely agree with him. There is no doubt about it at all, because many a time what we do is that we commence an audit, I won't say without planning. We have a planning in place. I'm not saying without planning, but we commence an audit because the client asks us to. Again, nothing wrong as far as that is concerned, But the fact remains that we should also know that from our side, the client may, and we all know this as a fact, most of the audits we do in the office, what we do is that we keep asking them, what is the position of the audit? They will say the client has to give information, sir. Little bit more information has to come, sir. Data is not coming, sir. This is a very standard response given by everybody who's involved in the audit and who keeps saying that, we have to keep on getting data. But what I have put in the last bullet point here, cost benefit analysis, please don't think that this is a part of SA 300. This is what I have put in here. Because if we don't plan, our costs are obviously going to go high and the benefit we get is obviously going to be lesser here. So I have put this in purposely, saying when you are planning for an audit as per SA 300, instead of the client calls you up and says, sir, please come for audit today. You say, okay, fine. From tomorrow, I'll send my audit manager and 2 article clerks. No problem. Before you send them, I think you should think that make out a checklist of what and all you require from the client. Send it to him and tell him that if this is ready, we will come. If this is not ready, we will we will come when this is ready. The client may be surprised. You may say, why you never told me all these years? All these years you were coming whenever I called you. What is the problem? All that discussion will happen. But this is where we are getting towards what we call as this quality control, maintenance. Because what will happen is that if you don't send this checklist to them and commence the audit, my doubt is that the checklist will never be sent, or it will be a different type of a checklist. It will be an ad hoc checklist which is made only for the purpose of commencing the audit and completing that particular audit. So please ensure that you do this as a cost benefit analysis, because irrespective of the time taken for an audit, irrespective of the fees which the audit is going to pay you, if you are planning for an audit, you should also keep this as a factor in mind, because it does not make any sense to go on, doing a particular audit when it can be done in much lesser time than what it is ultimately taking for you to, because you're waiting for data, you're not planned properly. Or see, planning does not only talk about the fact that you should have this quality control and you should have only this compliance with ethical. All this is a part of your normal code of ethics itself. Your code of ethics itself will take care of this particular situation, because when you have a checklist for the code of ethics, you will obviously be mentioning the fact that, okay, independence is there, I have done this particular thing and all those things, right? But it is also about the time frames. It is also about the time frames for an audit. Do you require to change the auditing partner, the signing partner? This also is a discussion comes up very frequently, because see, this concept called as independence, this word called as independence, as all of you all know by this time, it is very difficult to give a definition for independence. Independence is a state of mind. Whether we have to be independent or not is completely left to us. And it is event-based. Either I am independent at that point in time or I am not independent. There's no, I may be independent, I may not be independent. Maybe you may feel that the same partner has been signing for a very long time. You may want a change of audit partner. Why don't you try that out? Ask a new audit partner. Always, it is better to have a fresh set of eyes to look at the financial statements. If you have signed for example, for NBFCs, there is a requirement that after 3 years, the audit partner should change. There's a requirement that the audit partner has to change after 3 years. This is a specific mandate from RBI for a certain set of NBFCs. These are all part of planning for an audit, because the new partner has to be told what is to be done for the audit. More importantly, how many staff are required. You all may be wondering, I have got 5 article clerks. I can send only those 5 people. I cannot send all the, I can't get from outside. But do you require 3 article clerks? Do you require 2 article clerks? Depending upon the audit program, you all can start the audit. So this becomes important from 2 aspects. SA 300 becomes important from 2 aspects. One is, if you don't make a checklist, don't plan what has to be done, when it has to be done, and by whom it has to be done, as I said, you will never do this again. You all may come up with a checklist as and when you are doing the audit. I will just give you all a small example of this checklist-based audit, because I'm not saying you all should not use checklists. Checklists are definitely very, very useful. They definitely would need to, be there. But my only advice would be that please make the checklist well in advance of doing the audit, or even if it is a previous year also does not really matter. You can do the checklist one day in advance also. And let the checklist be relevant to the audit. It has to be very relevant to the audit. I will give you all a small example of this checklist. All of you all know about Caro by heart now. You all know the Caro paragraphs by heart. Probably even the 2020 Caro you all know by heart, wherein you're talking about so many aspects of, fixed assets and all those things. Just look at what the Caro paragraphs are saying. Look at what the Caro paragraphs are saying for fixed assets, right? They are saying that physical verification, has it been done or not? Does the company has a fixed assets register? FAR is there or not? And whether physical verification has been done. In the new Caro 2020, they are saying that whether all the properties are in the name of the company and all those things are there. You will have a checklist for this, but these 4 points will have a checklist. Your article clerk will go and ask the CFO, sir, checklist, FAR, it's a, so you will see the checklist. The FAR is given to you. Excel sheet is there, all nicely colored. No differences, no problem, fine. Physical verification done? Yes, done, no problem. All properties in the name of the company? Also, yes, no problem, agreed. Look at the question of impairment. This impairment is never asked. Impairment is never a part of a checklist because it is not there in Caro. Even Caro 2020 does not talk about impairment, or Caro 2021 as you mean, right? It does not talk about impairment. Because impairment is not there, my fear is that the question will never be asked. If the question is not asked, it will never be answered. So there may be an impairment, especially because of COVID times. All the literature we are having on COVID now talks about the fact that what can be impacted because of COVID? It can be impairment, it can be inventory valuation, it can be going concern. Okay, fair valuation to a certain extent of other financial instruments also. This is all will be the impact of COVID. Every person, right from US GAAP to our ICAI is saying the same thing. These could be the critical areas for impact of COVID. This question is never asked. So my only thing is when you are planning for the audit, don't just put in a Caro checklist, put in a checklist even for COVID also. And even if you don't put in a checklist for accounting standards, just put in one checklist saying that has an assessment been made of impairment. I'm just saying that impairment is only one example. You can look at multiple such examples given in various other auditing standards, wherein this question of the checklist approach has come in place and we will have to adopt. So when you're doing this planning for this audit, when you're doing the planning for the audit, kindly ensure that the checklist is one up to date. Second, it is relevant for this particular audit you're going to do right now. And most importantly, you don't have to do a checklist, which is a sort of a template. A checklist will have to be specific to the client. For example, for an NBFC checklist, you may require to put in the RBI norms. May not be required for a manufacturing company, obviously. You may have to put in some other norms there. But suppose that a particular company has got export incentives. You may want to put in the checklist on export incentives there. So this is an exercise which has to be done, and it has to be done every single year, unfortunately. You can have a template for that particular audit. You can have a template for that particular client. But before you send the people for an audit next year, just ensure that you are looking upon it for one, completeness, and two is whatever developments have happened during the year. It could be in terms of legislative changes, it could be in terms of Companies Act changes, it could be in terms of listing regulations requirements. Any of these things, just ensure that it is there. So basically the takeaways for planning an audit would be two things. One is that sit down with the client and tell them that this is what we took last year. This is what is going to happen this year. Please keep this information ready. And I'm quite sure that all of you all, in whatever audit you are doing, it may be a big company, it may be a small company, it may be a medium-sized company. You all have got enough and more data which is client-specific. For example, you may have a particular client where an inventory is a problem. You all know this from, when I'm saying problem, I'm saying that inventory valuation is always delayed. You all know this from the past so many years of experience. Put that in specifically in your checklist and ensure that This point is covered while you are planning for that particular audit. Other areas which we will have to look at include something called as, the audit program is always obviously very, very important. Audit program is a very important part of the audit process. Internal control over financial reporting. This again is a topic wherein we have got a specific section somewhere in the audit report which talks about ICFR. Now, there is a lot of debate going on about this ICFR all over the place. The company is saying that we have got a very good ICFR. As an auditor, we are always going to feel that there is a scope for improvement. There is a scope for improvement in ICFR because of the fact that, see, internal control as a process is not something which can be perfect. There is always scope for improvement. There is always scope for improvement in internal control. For example, I'll tell you all, when the Sarbanes-Oxley Act came, because I also wrote a little bit of a small book on the Sarbanes-Oxley Act. I will tell you all, in case of a company like Infosys also, because they implemented the Sarbanes-Oxley Act section 404, internal control of financial reporting, wherein the auditor has to walk through all these transactions. He should choose one particular area. And do a walkthrough of the transaction from start to finish. So basically what he has to do is, he will have to ensure that, say for example, he takes inventory valuation, or he takes, for example, revenue. He will have to run through the revenue from start to finish, in the sense that he will write from purchasing onwards, up till how it is accounted for in the books of account and how it is paid out. All these things he will have to do. In a case like Infosys, when this 404, your present ICFR is nothing but section 404 of Sarbanes-Oxley Act. It was observed that there was a delay in capitalization. Asset used to come to the Hyderabad premises of Infosys. It used to be capitalized in Bangalore head office only when the invoice was received in Bangalore, not when asset was received in Hyderabad. This also is very, very important because of the fact that if ICFR is proper, auditor gets a sort of an assurance that nothing can go wrong. You look at all the companies which are large multinational companies, right? You look at, many of you have had experience in SAP implementation though. Why is SAP so process driven? Why is it so, even to reverse a journal entry in SAP, you would require 2 or 3 permissions. It is extremely process driven because of the fact that they want to ensure that the control is always maintained. It does not matter whether it is delayed or there is a detailed process behind it. The idea is to ensure that. So when you all are doing this audit planning also, it is very important for you all to understand that please ensure that between last year and current year, there is, in case there's a change in the ICFR, what has changed there? And we also have to face the fact as auditors that a good portion of our clients are, as I said, not only friends, but they're also family-owned enterprises. They are all family-owned enterprises. They mean no harm. They don't want to do anything wrong. But for them, all these things like ICFR and all would just be compliance driven. It will just be compliance requirement for them. All the more important because of the fact that in family-owned enterprises, the internal control processes can always be improved. There's always a scope for improvement because of the fact that it's after all typically family-owned. So if you want a document, we can give you a document. I can give you all plenty of examples for this, I see internal control of financial reporting. So this happened, also to lot of enterprises in the first lockdown time, just when the COVID came. And it took everybody by surprise. It has happened even in companies which have been, like in international markets also, right? MNC companies also this happened. So this first lockdown, this first shutdown, people working from home, banks are not open. It took everybody by surprise. And so what many of these family-owned enterprises did was they said that we obviously cannot go to the bank for a loan because the bank is not going to give us a loan, or they are not even open for us to give a loan. We will take a loan from a related party. Once the lockdown is over, once everything is lifted, let us see what we can do about it. So just for the purpose of convenience, they took a loan from a related party, ensured that the problem is, cash flow is becoming okay, but maybe did not do the documentation. Maybe did not put market data. It has happened to many enterprises in the first lockdown. I can tell you all that. So as an auditor, when you're doing this, okay, fine. We put COVID as a restriction. We put COVID as a note there, other matter. All this is perfect. But going down, drilling down into this particular thing, have you all seen whether the loan is at market rates of interest? Is it repayable? Is it being repaid? All these questions would have to be answered. This will come out from your internal control procedure also, because does the company have a process for giving loans from related parties, taking loans from related parties? If not, please suggest a process. All we are asking for is an agreement. Many places you will find that agreement also is not there because it's a known person, sir. Don't worry about it. You can always get an agreement. So I think this is where we have to step a little bit further and look at those actual processes which is going to happen there. Physical verification. Physical verification is one area where we have to, again, one is plan for this properly. Sorry, before I go to documentation. One is we have to plan for this properly. It's coming in our car also. Is it the responsibility of the statutory auditor? Many of you are going to probably say, no, it is not my responsibility. It is TCWG, new term we have to learn now. Those charged with governance. This is not our responsibility. They will have to do a physical verification. They will have to give us a report. They will have to look at samples every year. Invariably, the physical verification should happen at least once a year, preferably at the end of the financial year. As an auditor, when you are going for audit during the year, if required, you all can do a sample check. You all can do, because please remember that end purpose of auditing is only reasonable assurance. You all may not even know the contents of that physical verification to do a physical verification check. You all may probably want to go for a test check of some items of inventory and see if it is actually there, if it has been valued properly and all these things. So once this responsibility goes on to TCWG, there can be multiple problems which can happen here. I will just give you another example. A very large biosciences company in Bangalore, of whom, fortunately, we are the auditors of this particular company. I mean, my partner is selling the report, but because I don't do too much of audits as such, but just, I'm there for them in case anything is required. They had a very strange problem in which that, again, we're talking about the impact of lockdown, and all these things here. 22nd March, there was a lockdown announced, as you know, last year. And on 20th of March, it appears that this company has given some stock statement to the bank. And it was on the basis of some data they had in that package. They did something and they gave a particular, stock statement to the bank. They had working capital limits there, obviously. So for the purpose of giving that thing, they had given this stock statement there. Nobody really worried too much about it because it was something, and this entire thing came upon them. So they just stayed quiet and said, okay, fine. This is a stock statement which was given to the bank. Later on, once everything, and this is now we're talking about the situation now, when they realized this, they suddenly realized that the stock statement they have given is highly overstated in the sense that they had not taken into account so many factors, and the fact that the 31st March 2020 stock was actually much lesser than what they actually gave to the bank, right? No physical verification obviously wasn't, because it was not possible to do a physical verification. The auditor, when this was told to my partner, I told him that please ensure that they inform the banker about it. For the purposes of your this thing, auditing, there's no problem at all, because 31st March, the value is much lower there. The company wanted to have a discussion whether they could actually show the higher value because they have given it to the bank. But this became a valuation problem. So we told them, we obviously cannot do this because previous year's value will also be checked. In case they do check it, it's a problem there. So luckily, they did not have too much of an implication with the bank, because they went and informed the banker that this was a mistake. Now the stock statement has come down to this particular level. So physical verification is TCW responsibility. As an auditor, See, one of the things we have learned right from our CA intermediate days, CA intermediate and CA final days are understanding the business. This is basically drilled down into us. Please understand the business. If you don't understand the business, you all will not be able to do a physical verification, even on a sample check basis. Even on a sample check basis. We are not asking you to know exactly what are the technical terms and all those things. But if you know that this company is dealing in this particular asset, these could be their possible inventories. That is more than sufficient for you to conduct this physical verification. So I would just keep it at that and say that, please look at it from the point of view of doing a test check there. That's only for the purpose of giving comfort that these items are actually there. But the responsibility, the primary responsibility, shall I say, rests with the TCWG. You will just have to give a sort of a assurance, reasonable assurance in this particular thing. So that is as far as SA 300 is concerned. SA 230, I'm sure that all the participants here have probably attended seminars on this and heard a lot about audit documentation. We know all these facts that, you will have to maintain documentation and all these things, and documentation is very, very important. And, even the chairman was saying, even Joman also saying about the fact that, we have to maintain proper documentation also. I also use the word saying that we have to defend the audit we have done or defend the audit we are doing, as the case, whenever somebody is, calling us for or asking us for information, shall I say. There are two aspects of documentation, which all of you probably will know very well about. One is quality and one is quantity. Quantity of documentation will depend upon how much of audit is being done, obviously. Number of vouchers being seen, sampling, all that will depend upon the quantity of documentation. But I'm going to focus my discussion today not on those things. Those are audit administrative processes. Let us say that there are 100 vouchers of sale chosen for sample. Maybe you have a summary of all the 100, in an Excel sheet and take a printout and keep it in the file. Maybe you have about 20% of that as a sample in your file. You have the actual sale invoices, delivery note, link with GST, all that is done. Perfectly done for the purpose of sample. Let us say the total number of invoices in that entity was 500. You have chosen 100, which is 20%. That is all coming in as per your audit program and all those things. We are not talking about, that documentation is important. I'm not saying no for that. It is important because the purpose of audit documentation apparently is going to be that, as per the standard at least, any person who has not been involved with the audit, please remember the wordings very carefully. Any person not involved with the audit should be able to make out what was audited, what areas were checked, how much was checked, and what conclusion was reached. This is what the requirement of AC 230 is. That's why I broke this up into quality and quantity. Quantity is fine. We will, as I told you, you'll look at all these, you'll keep this for revenue, you'll keep delivery notes and all those things. But I think the discussion today should be a little bit beyond that. The discussion is not about keeping those invoices. The discussion is not about that Excel sheet printout. The discussion is not about saying that, okay, this has been matched with GSTR 1, GSTR 3, GSTR 9, everything is perfect. That also is not a problem there, right? What is important from documentation? And I find this, as I will probably say, I will not say it's a defect, but an area for enormous improvement in audit quality or audit documentation is documenting the conclusions which have been reached. The conclusions which have been reached. I think that is where tremendous scope for improvement is there in all the audit files, including the, I will candidly tell you all that, including the large firms which are doing large enterprises. They also have tremendous area for improvement. I will just give you all a small example before I will go into the technicalities of what the standard is asking. Every one of us have seen audit notes on COVID. Every company submits other matter, the company is saying that the company is assessing the impact of COVID. In case there's an impact, the entry will be, the necessary impact will be shown subsequently. Some companies have said that impact of COVID has already been ascertained, it is not significant. Some companies are saying that because of the industry we're located in or the industry we are in, COVID is having very significant impact. All this is coming across a variety of audit reports or a variety of companies here. Imagine you are the auditor of that particular company. What is the documentation you're going to maintain for this particular note? The audit documentation you're obviously going to maintain is going to be a few of the discussions you probably had with the management. Okay, there's been a lockdown. The company has been closed for business for such a long time. There's always been a work from home atmosphere. Not many people are coming to the office. Business has gone down. Trade receivables provisioning has happened. Cash flow is impacted. Bank is not giving loan. All these are realities which you know as an auditor. It is impacting in the financial statements. But for the company to make a conclusion that the COVID impact has not been significant, and for you to agree with that particular statement in that particular audit report of yours, you all may need to build your documentation in a slightly different manner. You all may probably want to record or may probably want to document what discussions happened. Why is this discussion coming in? Why you are agreeing with it, or you don't agree with it? In case you have mentioned this as other matter, why it has gone to other matter? In case you put it as a key audit matter, why is it a key audit matter? I think that is where the scope for improvement, which I spoke about, comes in here. It is not just agreeing with what the management is saying. You may agree with them. You may agree completely with what the TCWJ are saying. But on what basis are you agreeing? And please put that into one particular paper and keep that on the file. It can be a soft copy, it can be a hard copy. It does not matter. Soft copy is accepted nowadays. Hard copy, sometimes, the quality of the invoices and all goes away after some time. So always better to have a soft copy. Keep it up in a soft copy. And I think you'll be more than happy to ensure that you keep this as a soft copy in your file or in your server, as the case may be, because this is what is being expected from the auditors. Anybody tomorrow who comes in and asks, tomorrow, what did you all do in this particular audit? You all should be able to open the file and say that you please go through the file. You may not get all the information, but at least 75% of the information you get, you will know what audit you have done and what areas you have covered, what extent to which you have covered those particular areas, and what conclusions we have reached. As Joman sir was saying, all these SFIO, NFRA, and all these people are now looking at auditing standards. In fact, they're only reading the auditing standards. Though I normally used to give extracts from the NFRA report on the ILFS, report in all my most of my presentations, I've stopped doing that because of the fact that as a post-mortem, it is very easy to blame the auditor, right? We all know that for a fact. You should have followed that, But what one takeaway I get from that particular NAFRA report on ILFS auditor is the fact that I'm not going to comment on the auditor or ILFS and all those things. I'm going to comment on NAFRA itself. They have taken the trouble of actually reading all these auditing standards, paragraph by paragraph. They have been able to point out in this particular essay 315, this is what is the risk which has been assessed. You are not mentioned this in your audit report. This is not a part of your documentation. This is not a part of you're not mentioning this separately. You can imagine if this is going to be what others are reading, how careful we should be in terms of our documentation. At the same time, having told you all of this, let me also not put fear into all of you all saying that if documentation is not there, tomorrow something is going to happen to all of us. And that is not what I'm trying to say here. I'm going to make a statement before I commence this particular topic, which is not very long incidentally, but I will just make out a blanket statement. This statement is going to, give you a certain amount of assurance, let me say. You take any audit firm in India, as I said, on an average, I'm talking about, on an average, you take any audit firm in India, they are about 60 to 70% compliant with documentation. I'm telling this as just as a general rule. Because you will have an audit program, you will have some sort of a plan for audit, you will have some sort of documentation. 60-70% already you are covered. What is important today is to cover that balance 30% in a 40% in a proper manner, in a structured manner, in a manner in which you all are able to convince or you're able to defend the audit done. This is where I'm coming from in terms of documentation. What you have to do, please continue doing. There are 4 or 5 key areas in which you will have to probably look at, doing this particular thing here. So the other requirements of 230 are timely preparation, definitely very, very important. You just look at the shortened time frames we have for reporting today, especially if it's a listed company. Okay, this present year may not be a representative year because of the fact that, okay, we've got a lot of extensions, no problem, that is fine. But otherwise, you just look at the requirements here. They are, I mean, the time frame you've got is really reduced, really compressed. In that particular scenario, it is best to do the documentation when you are at the client place. Of course, in the present situation, one of the things which I probably forgot to mention to you all was the fact that planning for an audit, again, during these times when this new word called as e-audit is happening, how do you plan for an e-audit? How much of documents can you take? How much can you not take? Do you want to put in a sort of a note saying that because it's an e-audit, it's not been 100% verification, or you would not have done what you normally would have done in case of a normal audit? Definitely food for thought, because at least I can tell you from personal experience, and what people from the office have also told us, is that it is not possible to do what that entire satisfaction which you get from a normal audit cannot be done in e-audit, because documentation may come, but audit is obviously not all about documentation, right? So with that in mind, just ensure that documentation is maintained on a timely basis. I've always give this example again of a very large multinational firm when I was in Hyderabad, and I'm talking about 2009, 2010, I think, around that time, or maybe much earlier also. Yeah, 2009, 2010, yeah, around that time. So, I mean, there was a reason why we had to go to this particular large firm. Partners, I was talking to the partner, and as I was talking to him, somebody, sort of walked into his room, who apparently was an ex-client of his, who's, gone away for about last 10 years. No work was done for the client for the last 10 years. But suddenly he appeared that day when I was there, and he said that he wanted one partnership deed. He wanted one partnership deed because he said, I've searched everywhere, I could not get it. Will you be able to help me to get the partnership deed? I would have thought that the auditor would have said, okay, I will search for it definitely. You come back in 2 or 3 days, we'll give it to you. But to my surprise, he called somebody, and whatever partnership deed was given, which was almost about 15 years back, partnership deed was given in exactly 15 minutes. Now, this was definitely very, very impressive. There's no doubt about it. Anybody would have been impressed by this sort of speed and this sort of, detail. So I was forced to ask him, how did you keep it, or how did you get this in such a short time? So he showed me a small thing which he had on his laptop itself, wherein they know that which document is kept where. That is the first primary thing. They say that, okay, in this particular, doesn't matter who the client is, this documentation is kept in this particular place. And it will always be there. It will always be there. It is not that when it is removed, it is documented. If it is put back, it is documented. So I think that is something which we definitely have to take as a lesson from, because of the fact that sometimes, we will say, okay, now let us go back to the house today, and then we'll do the audit from tomorrow. Documentation will take later on. So I don't think those things should be done. Whatever the critical documentation. I told you all about quantitative and qualitative documentation. I'll also talk to you all about critical and non-critical documentation. Not mentioned in SA 230, but I'm mentioning this to you separately. SA 230 does not talk about this. It says all documentation is critical only. There may be certain documents which are non-critical. Non-critical. Generally, suppose you've got out of those 20 invoices, you've got say 18 invoices. One invoice is missing. 2 invoices are not missing, are not there. Okay, non-critical, I can probably say, because you got the bunch of major invoices, only 2 are left. You could not find it. You'll probably get it later on. Build up. My request is that build up critical documentation immediately. Non-critical documentation you complete before you complete the audit. That's all I'll try to say. You build up the critical documentation immediately. Non-critical documentation, some missing pieces here and there, this you all can definitely take it just before completing the audit. Even then, you all will be doing the audit on time. So I told you all about this. This I am highlighting in bold time and again, because as I told you all are doing documentation, no doubt about it. But what is important is, what are those conclusions reached? It is possible that Nothing has happened. Everything is the same as last year. 31st March 20, what was my audit position? It has probably been the same in 31st March 2021. Nothing has changed. It is possible. I'm not saying no. That no qualifications, no EOMs, going concern concept is already there. That's not, I mean, it's a going concern. There's no question of testing for not being a going concern. Revenue has increased. Say pharma company, because of COVID, revenue has increased. So all the parameters with which you judge this particular company last year, everything is the same. You have performed the necessary audit procedures also. So for all practical purposes, your last year's audit file and your current year's audit file will almost be similar because everything has been the same. However, I told you about this COVID note. Generally, it is expected that, okay, the management has given a note. That's why we have talked about conclusions reached here. When everybody has said that there can be an impact of impairment, there can impact on inventory going concern, I would expect your audit file to have one small note, one very small note saying that because of 1, 2, 3, 4 factors, impact of COVID on the financial statement is considered to be insignificant. All you'll have to do is put in those. You are not going to judge, pass a judgment whether those numbers are correct or not. That is not our job. Just say that sales have increased, profits have increased, funding constraint is not there. All this who is saying? The management is saying. Because of this, COVID impact is not there. I would expect that this conclusion reached note is there in your documentation file because that is the basis. That is the basis on which you all have reached that particular conclusion. Again, who performed the audit work and date on which such work was completed, who reviewed the audit work. Please don't again go back to this concept of, we don't have so many people in the office. It doesn't matter. Maker, checker concept has always been there. It can be 2 article clerks also. It does not really matter. You may not have a hierarchy of audit manager, director, partner, then article clerks, audit assistants. That hierarchy may not be there in your firm. It does not matter who it is. Just ensure that because of this concept of maker and checker, which I mentioned, the 2 people are normally different. It can be an outside person also. Need not necessarily be a person who is a part of your office. You can choose to appoint, let us say, a person who is outside. I'm not again saying peer review, but you can choose somebody who is outside your organization just to come in and have a check on this and see what it is like. So it does not really matter who it is, right? So this is as far as the documentation is concerned. Then we have got significant discussion with significant management, matters of the management, TCWG. Again, you all go for audit committee meetings. It is discussed there. Maybe again, one simple, summary. Audit committee meeting, we had gone for audit committee meeting. This is what was discussed. This is the conclusion reached there. Another important area which I thought, since we are going to focus only on conclusions reached, as we've been discussing, is the fact that always we look upon the previous year for guidance. And there's nothing wrong in that because previous year signed, sealed, delivered, everything happened, no problems as far as that is concerned. But current year, maybe things are different. Any changes between the previous year and the current year, not only in terms of the financial statement, but also in terms of the audit report, will have to be specifically mentioned there. Now, in the impact of Karo, I'm sure that the Ernakulam branch and all these 9 branches of Kerala will be doing a separate session on Karo 2020 at some point of time. There are some statements which the auditor will be helpless how to answer the statement. For example, he's supposed to give a statement whether the company will be able to meet its liabilities within a period of 1 year. For the next 1 year, whatever its liabilities are, why will the auditor have to give the statement? That should be a statement given by the CFO. But it is there. We cannot escape from the fact that it is there in Karo. How is the auditor going to report on this? Okay, he will get a representation of the management. Still, is that his judgment? So this is where I think that conclusion reached. Are you depending entirely on the company, or are you Also looking at putting some validation, looking at current ratio, debt equity ratio, those sort of things, and at least have a reasonable level of debate with the management why this particular thing becomes important for them to understand. You can just look at the word used. It is called as assembly of final audit file. Assembly means it is like process of manufacture. I hope the GST department does not consider this to be a taxable service because they're using the word called assembly. But the very fact that they're using the word called as assembly means that some work is involved and a lot of work is involved necessarily, right? But even for a moment, if we keep apart this fact that, this word assembly is used, it's a complicated word, it's a complex word. I mean, we'll keep all those aside. This may not be people called about building up the audit file. They use the word called as building up the audit file in many cases. I will just give you all a very helicopter view of what an audit file should normally contain. I think we have got that here. What it should normally contain. What are my deliverables? Audit report, okay, there in the file. Final financial statements with my trial balance, it is there. Letters to the board of directors, including financial statements, approval of the minutes and all those things. MRL, whatever is maybe there. Do we have engagement letter, representation letter, audit completion, documentation is there. You please look at one what you can probably call as significant part there in the last part. Issues memoranda. It does not matter what you call it. You can just call it issues. Audit issues, you can call it. Audit issues and conclusions reached. What were the audit issues raised? Or what were the audit issues which you discovered during this particular audit and how was it disposed of? Did you agree or not? This is not about documentation of invoices, insurance company documents, physical verification. No, this is not that. We are talking about conclusions being reached here. Issues memoranda means you discovered that, I will give some topic which is very familiar to all of you all. There is a difference between the electronic credit ledger as per the books of account and as per the portal. Don't worry about GST 2A, 2B, 2C, 2Z and all those things. Simple problem is there between the electronic credit ledger and the books of account, ITC as per the books of account, and what ITC is coming in the portal. There's a difference. Assuming that 2A and all is matching and all those things are happening, right? You have shown this as an issues memoranda because this is obviously an issue which you have discovered in the audit, saying that, okay, ITC is not matching the books of account and the GST portal. The company has given a response that this will be rectified, this will be reconciled in the subsequent quarter. As most of the responses of management are, they will say, we don't have time now, too much of tension, too much of pressure is there. I will reconcile next quarter. Definitely don't worry about it. I will reconcile and give you a reconciliation statement next quarter. You are obviously going to note this in the audit file and say that, okay, the management has agreed to do a reconciliation in next quarter. Please remember that this is the conclusion reached. You are not going to comment on the fact that there can be something wrong and all those things. They have agreed to, do this particular thing, but it is going to happen only in the next quarter. Take that as a basis and ensure that audit completion means that in the next quarter, in case the reconciliation has happened, you may want to come back here and say that, see, this audit is not like dead and gone. You may want to come back here and say that finally reconciled on this particular date so that the file is complete. The file is complete. Or you may want to carry this over to the next year's audit or next quarter's audit and then part in this comment saying that reconciliation given, reconciliation audited, found in order, over, complete. Completeness is what we are looking for here. I think what is important for us is that 40%, 30% I told you all is only about completeness. And if you look at these things called as issues, memoranda, conclusion reached and all, you will come to the same conclusion saying that what is important for us is to, so this is a file which is going to go in a reverse, in a reverse direction. Please, I mean, you'll come from backwards here. You talk about discussion, correspondence, entity management, third parties, requirement submitted. What is the documentation you required? What is the status? When was it given? Company incorporation documents, what is called as master file it will go into, so may not be required every single year. And then you look at how the audit planning has been done, audit planning analysis, What is your sampling calculations for materiality? What is the responsibility matrix? Subsequent events, going concerns. You will also obviously have checklists for both auditing channels as well as the accounting channels here. All this would be a part of your audit file. It can be slightly bulky. It can be slightly bulky. I'm not talking about how big it should be and all those things, because obviously it will depend upon the size of the entity and all those things. A couple of quick points to mention to all of you all here is that this sequence, which I've told you, this sequence of which I told you, table of content, deliverables and all those things. This is not something which is given by SA 230. Y'all can choose whatever sequence you are comfortable with. But generally there should be a flow. When I open an audit file, I would expect to see the audit report and the financial statements straight away first, because conclusion, right? Later on, I would expect to see all the remaining documents you spoke about here, which you spoke about. Sometimes it may not even be in one file, it can be in different files. Still doesn't matter. For example, audit working papers may not be a part of this main audit file, wherein conclusion which has been given there. It may not be a part of this particular file. You can have it separately, no problem at all. Just for the purpose of ensuring that it is separate, you can have it separately. Absolutely. The sequence is unimportant. What is important is to ensure that the flow is there, right? And the flow is there means, as I told you, when anybody else is going to do an audit of your audit, they should be able to make this out. So let us, even if you take a theoretical possibility that, we get somebody, one of you, let us say I call Prashant to Bangalore to do I won't use the word called peer review. I'm just saying, do and see whether my documentation is incomplete. He's supposed to make out all these requirements here. Unless I have it in a particular flow, he will not be able to make it out. So what we will have to think of when we build up this audit file, and we all know this from reality, what is going to happen is the audit file is going to contain a lot of things. They're going to come out with a lot of matters, some required, some not required. The most important part of audit documentation is deciding what documents to keep and what to discard. Because you will be having a whole bunch of documents coming in, many of which will not be required. And we want to probably even think of discarding those documents. That also is a process by itself. What documents to keep and what documents to discharge. But if you all have this in mind, that there should be a particular flow for the audit report, for the audit file, you all will be able to ensure that anybody who's reading this will be able to come and reach a certain level of conclusion saying that, all right, it appears that this much has happened in this particular audit. There will always be a scope for improvement. I'm not saying no. We still are struggling with some audits for past years wherein we don't have data, we don't have, many of the documentation is old, we don't know what is to be done. The person who's in the company has left the company. So there could be multiple such challenges. That is why timely basis becomes very important. What is normally missing, I will tell you, properly organized file is normally missing. Naming the persons who did the work, not for blame game. Please understand that naming the person who did the work is not for blame game. It is only for the purpose of identification purposes only. Most importantly, cross-referencing with other documents. This is something, along with the conclusions I've reached, which I told you all, cross-referencing very, very important. We will have inventory valuation. During the year, we will have a note which says that the company has moved about 25 lakhs of rupees from normal inventory to slow and non-moving inventory. Financial statements will also mention that separate category, slow and non-moving inventory, current year, 25 lakhs of rupees, not there last year. What is the audit procedure you performed? Okay, you ask the management, what was the basis of transferring? What items were transferred? They give you a note. They give you a list of items that are being transferred. You go and verify those items. You've seen the invoices also for those items. This is your audit procedure done. Okay, done, completed, no problem, very good. Everybody is happy. But in your audit file, you may have to draw a reference to not only the schedule in the financial statements, but also the note given by the management, which is obviously going to be a separate, what you can say, it will probably be in a separate part of the audit file. That note, page number of that note, or whatever the reference number for the particular note is, That also will have to be mentioned here, because cross-referencing makes the task of the person who's reviewing it very, very easy. It also gives a certain comfort to the management themselves or to the auditor himself, saying that I know where these documents are. I know what has been the process followed here. I know exactly where these documents are. So that is why both these items become very, very important. So to top it off, the standard is talking about keeping the documentation for 7 years. So we will have to keep it in some form, digital form or in physical form for a period of 7 years. The only two things I will tell you all about, 3 points I tell you about, I say 230 on documentation, is that from a very practical point of view, when you all get the audit file, when the article clerks bring the audit file after the audit has been over, I think you have to take a very major decision what documents to keep and what documents to discard, what documents not to keep. Now, as I have told you all will have certain documents which are absolutely mandatory. One is all those client KYC, memorandum, articles, all those things. Second is independence requirements, your requirements, appointment letter, independence, all those requirements which has been there. In case you're taking over the audit from a previous auditor, no objection from that particular auditor. All that is a part of your normal, what we call as master file, wherein all this is captured there. Client's GST number, PAN number, TAN number, all those things are there in master file. Audit file itself, some people call it as on-field audit file, wherein you have this audit program, you have this audit checklist, you got what is the work, the number of invoices received, what is the pending list that has been sent every single day, what response have been received there. This file can become a little bit here and there, right? This file is what you have to organize. Ensure that unnecessary papers are not there. Whatever information you have asked for has been received, and it has been mentioned as it has been received on this particular date, and a procedure has been performed on that particular thing. So this can be your second file. The second file can be your on-field audit file or on-field audit file, on-site audit file. The third file, which I thought we will divide this into 3 files, is going to be your conclusions reached file and your final file, we can call it as, wherein you have the audit report, you have the final financial statements, you have a small note cross-referencing the other audit files as to what are the conclusions you have reached in that particular audit, what basis you have reached the conclusions. A very important point I will have to mention here definitely to you all is the fact that on a few areas, a few conclusions are taken for granted, right? A few conclusions are taken for granted. For example, I can give you all this note about director disqualification. We will always feel the director disqualification is the work of the company secretary. As long as the company secretary gives us a report saying that the director is not disqualified, and the director himself gives us a declaration saying that he's not disqualified, we should be more than happy. But that documentation should be there in the audit file, and that's the basis for reaching the conclusion, I should say. You're not going to obviously go and investigate whether the director is disqualified or not, but keeping that documentation. This is what we spoke about in terms of audit documentation completeness. So please ensure that these particular things are performed, and on that basis, you all will find that audit report or your audit documentation file is probably, what you can say, complete in all respects. As I told you all, first time you all will have a problem. First time there will be a problem. When I'm saying problem, I'm not saying it's going to be negative, but you all will find it a difficult task to organize this particular file. But I can give you all the assurance that we've all done it once. This is a one-time effort. That's all I'm trying to say here. Don't worry about the scale of the audit and all those things. It does not really matter. Your client may have 12 invoices, BPO company. He may have 12 invoices per year. You can do 100% verification, no problem. Keep all those 12 invoices in the audit file, no problem at all. Doesn't really matter. His main cost can be salaries and wages. Extract of salary for all the 12 months, you can keep in your, the audit is actually over there. Conclusion reached is already done there. That is your on-field audit file. Conclusion reached, look at last year's audit report, current year's report, what are the changes, any impact of any of these pandemic and all those things, right? Write a small note on that particular, keep it in your audit file. Your audit file is complete, audit documentation file is complete there. So please look at it from that particular point of view. Quickly on the reporting standards, before we take up a few questions, I say a couple of questions have already come, but we'll take this up from 5:45. I told you earlier, I will repeat. SA 700 has got enough and more scope for you to express what you want to express. And the structure is that we've got opinion, we've got basis for opinion, we've got KMs, we've got other information. What are the responsibility of management? We've got auditors' responsibilities. Other matter, report on other regulatory and compliance includes your internal control of financial reporting and all these things. Enough and more content is there. Now, the standard also, the auditing standard also has got certain requirements wherein the auditor can mention this particular area, what should be done there. Each of these has got a separate auditing standard by itself. For example, key audit matters, which you look at a little bit in detail, is got something called as SA 701 talks about key audit matters there, right? So let us say that you have, for example, this discussion came about, since we cannot not have a discussion about COVID in these COVID times. A discussion came about saying that should COVID not be a part of qualification, emphasis of matter, key audit matter, or other matter? This discussion came up in large numbers. A lot of people kept on discussing this. And obviously the results have been mixed. Some people have put it as, emphasis of matter. Some people have put it as other matter. Very few have put it as a key audit matter, because really COVID cannot be a key audit matter. And some people have just stayed quiet, not said anything about it. So reporting on COVID is obviously mixed there. But I'm just saying that in case you want to report it, you will have a particular auditing standard which will talk about it. For example, they're talking about the fact of going concern. Specific 520 standard is there. SA 520 is there. So don't worry about any of these standards when you're talking about going concern. If you feel that the going concern concept is going to be doubted or could be problematical, simply refer to SA 520. Don't worry about all the remaining standards here. You don't have to worry about the paragraph number in SA 700 to report about going concern, because SA 700 says that in case you are questioning the going concern concept, please go back to that particular auditing standard. Don't look at it from the point of view of only your, what you can call it, SA 700 only. So that's what is very important here. So I will just give you all one example, which I feel will represent what we are talking about here. Audit report, we know, we have got, I have already mentioned things like emphasis of matter, other matter, key audit matters. We look a little bit at key audit matters now. But there is also something called as qualification in the auditor's report. Members who are aware of this some time back will know that there was a specific statement given by the ICAI saying that statement of qualifications in auditor's report, in which there was a specific guidance given to members how it has to be qualified. It has to be in bold. One particular paragraph has to be mentioned separately there. We can also have a disclaimer of opinion, wherein you can refuse to comment upon the financial statements. I will just give you all one example to ensure that all of you all know that there is enough and more scope for mentioning whatever we want to say in the audit report. One thing is very clear, that we cannot park this dispute between the auditor and the client in the notes and accounts now. Especially if it's an Ind-AS company, that is all the more impossible, because we cannot park the judgmental disputes in notes and accounts. It has to be that account for in that particular manner, or some agreement has to be reached on how to account for that particular transaction. A company called as Karnataka Power Transmission Corporation, which is basically in the business of transmission of electricity. Look at the audit report historically. More than 25 to 30 qualifications are there in the audit report. More than, I am talking about qualifications, not about EOM. EOM also is there. Other matter also is there. A very comprehensive audit report meeting all the clauses. But after such a large qualification and such a list of qualifications, the auditor says that subject to the above, the financial statements are true and fair. And many of those qualifications, to my surprise, were non-compliance with Ind-AS, not judgmental issues, with the non-compliance with Ind-AS standards. We'll not get into what those standards were and all. Again, I happen to know the auditor very well, but what I would have done is that I would not have taken the trouble of listing out 28 qualifications. I would have simply said that, I would have told the management first, you mandatorily have to follow Ind-AS. If you are not following a particular Ind-AS standard, I am definitely going to mention this in my audit report. I will not list out what standards you're not following. I'm just going to make one statement saying that you're not followed details. That's all. But the auditor told me, when I asked him this, he told me that what to do, sir. It was also mentioned the same thing happened last year. So last year also was in day, so I had to carry forward last year. I could not change my audit report completely. So he had a particular reason for that. But still, I would probably say that this is what has to be done here. Because not much has been discussed on key audit matters. I'm going to take that up briefly before we open up for questions there. This is a new concept in audit reports. SA 700 talks about the fact that it is not an audit qualification. It is not an emphasis of matter. It is not other matter also. What will be key audit matters will only be factors which the auditor feels are most significant in the audit of financial statements in the current period. And they have been obviously told to the people who are charged with governance and all these things here. What are the most significant areas in the audit? More importantly, in the case of key audit matters, the auditor is supposed to also say how he has, what you can possibly say, handle that particular matter in the audit. What are the significant risks areas, basically? What involves significant judgment? What happened during that particular period, right? Key audit matters, how it was addressed. These two are important here. So if you go by an elimination principle, it is not a qualification. It is not a disclaimer of opinion. It is not a EOM. It is not other matter. It will fall under key audit matter. You may want to go by this elimination principle and, more importantly, ascertain what are those areas. Invariably, you will find that, see, I've already sent this presentation to the Ernakulam branch. You can definitely ask them and pick it up from them. There are certain areas which are very popular in key audit matters. Globally, impairment is a very popular key audit matter. In India, a few companies, the new India standards are becoming, because we only get access to reports of listed companies, you can see that some of these areas are. But I will emphasize to you all what is the significance, what is the importance of key audit matters. The importance is to tell the user of the financial statement, reader of the financial statement, the fact that these matters, the auditor considered to be significant in the audit. When we are talking about the fact called as significant, we are also giving a hint that in terms of the concept of materiality and risk also, it may be on the higher side. He also has to state that this is where also, this is a matter in which he has addressed this particular area in the audit. So if you go back to this elimination principle I told you all, it is not commenting upon transactions here. This is not commenting upon transactions. This is not commenting and saying that revenue recognition has not been done properly. Inventory valuation is wrong. All those will be covered either in any of those other elimination principles I told you about. Key audit matter will not come. It will be other matter. It can be qualification. It can be EOM. It can be any one of those things. We are just saying that these are the important matters which have to be taken account here. Going concern is not a key audit matter. So I will just tell you about this ACCO report on, please forgive me for this small, font here, but I'm just giving you all the main points here. Asset impairment was considered to be a key audit matter. I told you the reason why also. Asset impairment is very important because, again, judgment of management, revenue recognition, allowance for bad and doubtful debts, goodwill impairment, taxation including deferred tax, investments, financial instruments, valuation of inventories. In those particular audits, the auditors have felt that these are significant key audit matters. Please remember that they have also given the manner in which those key audit matters have been addressed. One of the things which is not mentioned is somewhere mentioned in the middle here, but if you are able to read it, you can see it. IT related measures. IT controls is becoming a key audit matter reported in a lot of financial statements because auditors will not be able to have complete access to the package. They are going to say that we have relied upon the IT controls there. Sometimes IT controls may not give the information required by the auditor. It is a key audit matter, but the way in which he has addressed it is that he has tried to get a workaround, ensure that the information is given to them in some other manner. This could also be a key audit matter. So this is a very critical area which the auditor has to mention here. Many people have asked me this question saying that what is the impact of this key audit matter? Will it have a material impact on, say, the shareholders getting to know about this information, or more importantly, does it give a comment that IT controls are weak? The answer is no. The answer is definitely no. The answer is not saying that IT controls are weak, but if you ask me if the IT controls can be improved, auditor will definitely say yes. That is why he's putting it as a significant matter, right? In the Indian context, this again, I will brief you earlier only about the Indian context. Listed companies, Ind AS, both Ind AS 115 and Ind AS 116. 115 is revenue recognition, 116 is lease accounting, have been reported as key audit matters in many audit reports. So you all can probably ask me a question: how can an accounting standard become a key audit matter? Does it mean that the auditor has not understood the accounting standard? Does it mean that the judgments made by the management are incorrect? Whatever it may be, I do not know the reason why you will have to look at individual companies for that matter. So, for example, if you look at LIC Housing Finance, they've talked about transition to Ind AS, ECL model, IT controls, uncertain tax positions. Uncertain tax positions also is a very popular key audit matter. You look at Mindtree, they have said revenue recognition. You look at Biocon, they have said revenue recognition as per Ind AS 115 and taxation. So what does this convey to the reader of the financial statements, to the user? More importantly, what does it convey to a chartered accountant? Let us say that you are reading the Mindtree, you're reading the LIC Housing Finance balance sheet, you're seeing the audit report, you're seeing this particular saying that ECL model has been this, your related judgment made by the management, it could change IT controls. Does it convey a negative image to you? The answer is very clearly no. The answer is very clearly no. We will have to look about this situation and we'll have to answer this question in a two-phase approach. First is that this is purely the privy of the auditor. This is what the auditor is feeling is significant. He will obviously look at accounting standards only. He will obviously look at auditing standards only, right? He is not going to talk about business segment reporting and all those things. He's only going to look at auditing standards and accounting standards for the purpose of reporting to you all. So what does it convey is that as far as the auditor is concerned, these areas were significant. These areas were significant. We will also remember that to a large extent, to a very large extent, you all will find that the key audit matter will have a small link with ICFR, Internal Control of Financial Reporting. If at all the auditor suggests any improvement in his ICFR report, it will definitely be on a key audit matter. So you can establish a link there and say that in case he says IT controls have to be removed, have to be improved, you will find that in IT controls will definitely be as a key audit matter. Maybe he's not getting all the reports he wants. Maybe all the data which is required has not been given there. So I think that is what we should take away from your key audit matters for the purpose of understanding this thing. What is the importance of auditing standards? All of you will probably be aware of this. AQMM model is going to come very, very soon. You all will have to look at maintaining this because we are going to be judged based on a score which will be given by our AQMM model. So it is important for you to follow a certain basic number of standards here. Points have also been suggested for this particular thing. Okay, right now it may come for listed companies, but it is not going to be very long before it trickles down to all of us. So it's probably a good idea to make a start right now. For medium-sized firms, what is to be done? There's no exception from auditing standards. Do as much as you all can. Don't try to do too much. Don't try to do too little. As much as you all can, please try and ensure that you'll follow all the auditing standards, which we have spoken about a little bit here today. Maintain those necessary documentations. Maintain those necessary documentation. And I'm quite sure that all of you all will be good to go in terms of this thing here. Okay, a few questions have cropped up here. So let me quickly answer those questions. I hope the spelling is right. Don't get me wrong, the spelling is right. Okay. Physical verification of inventory. Again, Sony sir, good evening. Again, I've seen you so frequently, so many conferences now. Physical verification of inventory mandatory. Views, please. Physical verification from the point of view of TCWG, sir. Definitely they have to do it. Auditor, as I have already said, very clearly only do a test check. No doubt about it at all. Company operating in tourism sector closed down for the last 2 years. COVID now, strike off, it will take another 2 years for giving strike off application. There is no intention to resume the operation, but the auditor is required to report on going concern. 100% yes, definitely. Company has been closed down because of COVID, and they have no intention of opening service same. So whether we should put it as a going concern. Sir, what I will do is that I will not say not a going concern at all. I will use statement of facts. In my audit report, I will put statement of fact. I will just say that company has not been in operation for 2 years, applied for strike off of name. Therefore, SA 520 may not be a going concern. I'll put it in that particular manner. First, my report will have a statement of facts, and then it will mention the fact that I'm applying this auditing channel and it may not be a particular going concern. Srikanth has asked a question saying that how much is assurance we get from the letter of representation could be suggest. If you ask me a very honest answer, 0%. If you want me to give an answer, 0%, because letter of representation is only a piece of document now. Don't get me wrong on this, but more importantly, I will link the letter of representation with what you have got in your audit file as documentation. Just having a letter of representation may not help you, you may not be able to defend the audit. So please ensure that your letter of representation is very, very clear and linked to your audit file. I will just give you a small, only for not for all the members, but Srikanth can also definitely look at this. You can go to YouTube, you look at Thomas Cook, auditor representation, Thomas Cook. If you want, I can send you the link also. The auditor has got a letter of representation saying that there can be a possible fraud in Thomas Cook. There was a fraud in Thomas Cook, as all of you all know. The UK legislators who were grilling this auditor asked him that, how is it even possible that you as the auditor can take this as a LOR from the company? So I would not place too much of him. So, I mean, those are all outliers. So we're not going to happen in our case, but we will ignore those particular people. But for our purposes, let me ensure that if you have got an LOR, please link it with your audit file. Definitely ensure that your documentation also is there for the purpose of getting this particular thing right there. What documentation improvements might have been done by auditor for Satyam engagement to avoid such fraud? If time permits, could you suggest? Okay. Satyam, of course, I do not know what improvements he could have done, because this Srikanth, I'll tell you about Satyam was very deep-rooted, very, very deep-rooted. Okay. I can tell you that I know a person who was in the internal department of Satyam, chartered accountant, not outside firm, working as internal auditor in Satyam. After all this happened, I asked him a question. Did you not know about this? Could you not have reported about this? He said, sir, I can tell you that we did not know about this. But the fact remains that if you ask me if we could have doubted something, definitely the answer is yes. He said there was a revenue team which was working overnight all the time, which never used to happen. Why is the revenue team working overnight? It never used to happen because Satyam had so many offices. So he said, if we had asked this question at that particular time and got some answers and done some investigation, we definitely could have probably minimized it. But completely discovering what has happened may not have been possible. So I would probably think from the auditor point of view, if you put me into auditor's position, and let me be honest here, I may be wrong. Others may also think that I'm wrong in this particular thing, but I'm 100% convinced that this could not have happened without a certain degree of compliance by the auditor also. He obviously knew about this, or at least he knew about some aspect of this. Documentation cannot save you here, Srikanth. Documentation cannot save you here, because this is a completely different issue altogether. Documentation will not be able to save you here. This is my opinion. But suppose the auditor was not hand in glove, suppose he was not a part of this, and this thing came out, right? He's going to go back to what we normally say. I saw an invoice. It was signed by the competent person. It is not my job to make out if it's a fraudulent invoice or not. That's the only escape. That's the only, what you can say, protection he will have in terms of saving himself. Satish Kumar Madhavan Nair, where to report non-compliance of Ind AS and preparation of CFS in Karo? Not in Karo, sir, main audit report. Non-compliance of Ind AS, don't worry about Caro. Please mention this in your audit report itself, saying that the company has not followed Ind AS. You can also mention which Ind AS has not been followed, because if you go back to Ind AS 1, it says that there has to be an explicit and undeserved compliance of all Ind AS accounting standards. In this particular case, standard not been followed, all you have to do is just mention that Ind AS 109 has not been followed, Ind AS whatever standard has not been followed here. Main audit report, please don't look at it from the point of view of Caro, because Caro has got nothing to do with this particular situation there. In Caro, you could have other judgmental issues of Ind AS that you can report in Caro, like your contingent liabilities and all those things, tax amounts and all those things that can be reported in your Caro. Okay, so I think I have answered most of the questions, sir. Prashant, sir, over to you. Thank you very much to everybody for a very detailed, patient hearing, and thank you very much. As they say, Nanni.
Thank you so much. Valare Nandi, we have to tell that. Prem sir, it's over to you,
Yes.
sir.
Okay. Thank you, sir, for the very informative, in-depth, and interesting session. Just 2 days left for the Thiruvonam, and in the festival season, we have Muharram and Thiruvonam coming very closely. We are in the festival season, we had a really nice feast for our brains. Dear members, before we conclude, please note, tomorrow we have a session on registration renewals and audit of non-profit organizations by CA.M.Kandasami from Chennai. Please don't miss it. Now it's time for expressing our gratitude to our dear faculty. Let me request the chairman to present the memento to our faculty.
Thank you so much.
Sir,
Thank
please
you.
accept the memento on our part. Thank you so much, sir. As you say, Valariyadhigam Nandi. Thank you.
Thank you very much. Happy Onam to all of you. Happy Onam to all of you.
Thank you, sir. Thank you. Wish you the same.
Thank you.
Okay. Thank you, sir. And now the past chairman of Kottayam, CA via Murali Chandram sir will propose the vote of thanks. Sir.
Am I audible?
Yes, sir.
Very audible, sir. Very audible.
Okay, sir. Chairman of Navaratna Conference 2021 and the Central Council member and the Indian representative in Chartered Accountants Asia Pacific Public Sector Financial Managing Committee, Sri C.A. Bengaluru, past SIRC Chairman and Convener, Sri Jayakumar George, Chairman of all these 9 branches, and Vice Chairman and committee members. Good evening, happy Muharram and Onam to all of our members and persons who are working behind this screen. Today, Wednesday, is the 8th day of the wonderful and enthusiastic Vital Chain Seminar, organized jointly by all the 9 branches of SIRC 5CAI. I, on behalf of all the 9 branches and members who are attending the seminar, and on my behalf, first of all, thank the conference chairman, Sri C.A. Kandasami, who is also the Indian representative in Public Sector Financial Managing Committee of CAPA. Despite his busy schedule, took much effort in helping and arranging eminent and famous faculties and in coordinating for the smooth running of this seminar. Thank you so much, sir. We pray for the grace of God in performing in an excellent way in your new assignments. Also wish you best of luck in the new assignments. Sri Jayakumar George, SIRC member and former chairman of SIRC, the convener of Navaratna. Thank you, sir, for the continued support and guidance giving to our SIRC branches for performing better, and especially for the smooth functioning of this Navaratna 2021. We know you are the part and parcel of all activities in Kerala, SIRC branch activities.
Something wrong with I think there is some connection issues with Murli sir. Murli sir, are still there?
Yes, sir, on
Sir is on mute.
Yes, sir, you can conclude, sir. Prem, sir.
Okay. On behalf of all the managing committee members of all the 9 branches, and on behalf of the organizing committee, let me thank our dearest Center Council member Babu Brand Kalivel sir, as well as our dear SIRC chairman, past SIRC chairman Jomon Kejot sir. Also, let me thank their faculty for the day, CA Mohan R.Lavi sir. Also thank all the chairmen of all the 7 branches, or the 9 branches here. And let me also thank all the participants for the session. Thank you all. Thank you.
Thank you, sir.
Now,
Thank you very
I
much.
think let's proceed for the national anthem. Let's stand for the national anthem.
जन गण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे जय गाथा जन गण मंगल दायक जय जय भारत भाग्य विधाता जय हे जय हे जय हे जय 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 जय.
Thank you, dear members. The session is over. Thank you. See you tomorrow.
Thank you.
The meeting is adjourned. The meeting is adjourned for tomorrow. We are having the conclusion of Navaratna. The show by the Palakkad branch. Vinod will be heading the show. We have the learned speaker Kandasami sir on